Hey, what's up, everybody? My name is Anil Victor. Welcome to my channel, Etrexo Capital. This is kind of like a spin-off of my other channel that I had, Etrexo FX, where I teach people about Forex trading. Later in this video, you'll kind of get a recap of where my headspace is, what it is that I do personally. But I just wanted to welcome you to Etrexo Capital, where we'll be showing and sharing the latest tips, tricks in the financial space, as well as business and entrepreneurship. If you want success in life and in business, then you came to the right place, because we're going to be teaching you a lot about what's going on in the current markets, how to trade in those current markets, things to be looking for, things to be paying attention to, and overall, just entrepreneurship, like ways to grow your income, other avenues to grow. So if you're interested in that, I highly recommend that you hit the subscribe button, turn your notifications on, because there's going to be a lot of content over the course of this year that's going to be released. We're going to be pushing out 3 to 5 videos per week. I would say around 4 videos per week, just on topics related to the stock market, what's going on in news, and how that affects the markets. So, sit back, relax, enjoy it. Feel free to comment down below if you have any questions about the channel, myself, or what it is that we're doing, and just enjoy this quick segment of Etrexo FX. So if you like what you see later on in this video, definitely swing by Etrexo FX. I'll have the link in the description of my other channel, and just kind of devour through that foreign exchange information to help you in the Forex market. But thank you for tuning in. Thank you for jumping on board. Again, I'm Anil. Welcome to Etrexo Capital. I hope you guys enjoy.
Trust me, bro. It's a process, man.
Yeah.
It ain't simple. I mean, well, it is simple, but it just takes time. Like, honestly, man. Like, me personally, I've been trading for a minute, since like 2014. But I've been like playing around with different things. Like, I started off in like the penny stocks, because I ran across this guy, Timothy Sykes or whatnot. And I was doing that for a little while. I started to see success with it, but I wasn't really seeing as much success. So then I kind of like jumped over to cryptos around 2017, when like cryptos was like really starting to boom.
Yeah.
Bro, all over the place, man.
Right.
That craze ended, went back to stocks, and then my buddy was teaching me about something called IML, started doing IML for a little bit. I'm like, all right, I just need to sit down and really just get my mind right,
Right. Yes. I've been trading since like 2017. I first joined IML, which was a bust. And then like after that, I joined Quillen Black. I'm not sure if you ever heard of him, Q Banks.
Yeah.
My student is, and I just recently got into Raw, of course, so it's trying to get at it, man, for real.
Yeah, honestly, man, like, cause I went through both courses, right? So like I did Q Banks, his like whole course, start to finish. Like, I probably watched some of the videos, like half of the content twice, but I did everything once full. And I went through it again, like with the confluence videos. His confluence videos are really good, because it kind of teaches you like his overall outlook on how he like pieces everything together. But I was talking to my boy earlier today, and I was telling him like what really got me like consistent and actually to stop blowing accounts was Raul. Like, him teaching the whole 1 to 2% risk parameter with his trading style. Like, dog, that was life changing for me, because I used to take trades, like, bro, believe it or not, man, like I had like a 20K account, ripped through that, bro, lost everything, dog. And it was because I was, I never set no stop losses. I was taking massive trades, like putting 10 lots on GJ, on sales, when in the overall grand scheme of things, it was creating higher highs, higher lows, draw down 7,500, draw down 4,000 on gold, like crazy numbers, man, crazy numbers. But then when I ran into Raul and his like course, and how he teaches, like, it really doesn't matter how many pips you know, of like you set your stop loss, as long as it's still like that 1 to 2%, like that's what you need to stick to. You know what I'm saying? And just always remember, like, all right, if you're risking 1% to gain 2%, you know what I'm saying? Like, even if it's 100 pips stop loss, make sure that your take profit is 200 pips, right? And you don't close anything in between that. I mean, unless you see that, all right, it's gonna turn around and, you know, you're at a heavy resistance point, then you can close your trades. But like how he teaches it, where he's like, look, if you got 10 pips on the stop loss, your take profit's gotta be 15 to 20 pips minimum. Like, you can't go any lower than that. That 1-to-1 like scenario where you're like, all right, I'm gonna risk 10 to make 10, it don't work. It doesn't work. Because in the beginning, like for you and like even for myself still, like I'm not even like, you know, where I want to be, but I know my percentage, my win rate percent is like 39.8. You know what I'm saying? Like, this was me just like tracking all the data, and just kind of keeping track of like how many trades I'm losing, how many trades I'm winning. But I'm just keeping with that 2-to-1. So like I'm risking, you know, like 1% to make the 2%.
I got you.
Mm-hmm. Yeah.
So as far as like you, I know Q and most of them trade based off price action and market structure and things like that.
Yeah.
And I just feel like I feel like I got a understanding of the whole concept, but I feel like it's still like something I'm missing where I guess it's stopping me from being consistent on all my trades. Cause I be consistent for like, I go a whole week, a week or two, and like the next 2 weeks, boom, losing. And it's just like, I don't know, it just set me back every time. Cause it's like, I'm thinking if I'm doing it right or what I'm doing wrong and like, things like that. So I'm just trying to get a understanding of like where I'm going wrong and things like that. So,
yeah. How many pairs are you trading?
I just mainly stick to like 2 pairs, man. I don't really be trying to trade a lot of pairs and stuff like that. So
Yeah. Is it the ones that Raul trades, or are you trading just like your own 2?
Yeah, I mainly trade Euro AUD and GBP, and that's about it.
GBP.
I started messing with I actually started messing with cryptos last weekend or whatever. I made a decent profits, but then like that Sunday, I want to say Sunday and Monday or whatever, turned back around, got crushed. So
yeah, man, the cryptos are definitely a different beast. I will say that. Ethereum, I mean, I'll spot trade it where I like I'll jump in just at regular prices. So like, for instance, Ethereum, I'm actually holding Ethereum in my Coinbase from like 200 or whatnot. So like, I'm not trading it through like MetaTrader or like Hugo's Way or anything like that. I'm actually like holding Ethereum and Bitcoin or whatnot.
Yeah.
But
are you into like Ripple and stuff like that too? Ripple or Stellar?
Nah, so I don't really have too much. I just have this one crypto OX. So I had it's like, let me see, ZRX. Like, it's on Coinbase, but like I had that from 24 cents and it's at 40 cents. And then I also had Ethereum when it was at $200. Now it's at like $395. So I'm just kind of like holding them bad boys. Like, I try to trade them on MetaTrader, and right now, you know, they're going up. So like, if you're gonna do anything with those, let it be buys. Like, don't take no sells on like any type of cryptos right now, because that wave might come in, that momentum, and then push them like even higher. So I wouldn't really take no sells on cryptos.
I got you.
Yeah, but let me pull up the trading view real quick.
So how long you been in Brawl course?
Not too long, man. Probably for like 2-3 months. Honestly, like 2-3 months I've been in this course.
Thanks.
Yeah, I don't talk too much because I'm more so focused on the charts. You know what I mean?
Right. Yeah.
You know, a lot of cats, they like getting suggestions from other people, but I know for me personally, I like to hold myself accountable. Like, if I were to come in the chat and be like, hey guys, like, what do you think about a buy on GJ and then people are talking about, oh, it's a sell, and then I go take a sell, and then it really is a buy, I'm gonna be beating myself up like, damn, like what I saw was right, but then I was listening to like the masses, which caused it to be wrong. And who's to blame? Like, you can't blame other people for taking the trade on your own. You know what I mean?
Yeah, I feel you.
Yeah, bro. Yeah, let me see. Share the screen. Can you see this?
Yeah, I can see it now.
All right, perfect. Hold on 1 minute. So you say you trade Euro odd?
Yeah, Euro odd. Yeah.
That's actually a smooth moving pair. Let me see something real quick. Yeah, so just looking at this one right here, like, you know how like Raul's approach is, like he always goes like from a top-down analysis, right? Where he like looks at it from a monthly, the weekly, the daily, and I tend to do that too, just like to get the overall bias of like what's really shaking up on the charts, and then you can kind of like mark out your points of where price turns around at or whatnot. So like just kind of looking at this, let's see here. Just kind of mark out some like turning points.
Hey, could I let me see if is it cool? I screen record it.
Yeah, that's cool.
Okay.
I should be recording it on my end. It like automatically records, but if you can record on your end too, go ahead and do that.
Okay. Yeah, I see it says recording, but so what would it be like as far as like, because I'm not too sure about like recording on this off of Zoom.
Yeah, this is off of Zoom. I think I have to, because I'm recording, I think I'm the only one that can record it, because I sent the link to you, or I set it up. Okay. So it's recording on my end. So when it's done, like if you send me your email, I'll shoot you this video over to you.
Okay, that's cool.
Yeah. All right, so like we got something like right here. We got like these wicks, price turning around, coming back up, trying to break. We're not really doing much. And then let's see. Sit right about right there. I'll put this out like a whole number, or the quarter. Love this one. And then sometimes I'll pull up the line chart, because the line chart will kind of show you like, all right, this is where price like actually stopped at. So like you can see like you got a couple balances right there, little gap right here, an overlap. That could be considered a gap, but monthly time frame, that's a lot of area. Like you have like a overlap, a tap, overlap. You got a lot of motion taking place right there, and then even up here too in this area. So like these on a monthly, this is all I would do, because this is like, this is above price, so you got resistance and you got support on the monthly. Anything I really don't see too much for anything here. I mean, this looks like something right here. Yeah, let's go ahead and put that up there, because that does look clean. So we put something like about right there, this area.
And you say you always set that to like on a whole number as far as like your monthly support and resistance?
Yeah, so like I will keep it at like the quarters. So like the like for instance like 6,100, 61,250. So for this one, it's closer to 6,100 versus 250. So I'll put it like about right there. And if you go back to like a candle chart, you'll see like, all right, wicks are coming up into that area. Price is stopping right there. It's turning around from that region. So that's a good little area. And then you just drop down to like So just looking at it though, before we drop down, like bias wise, like, you know, it's been very bullish for a long time. You know what I'm saying? Like it's just been uptrending. So we've been making like higher highs, higher lows, higher highs and higher lows. And right now where it's at, it's looking like it's bouncing off of the moving average. So this is my 20 moving average. But we're not taking no trades off of, you know, like a monthly time frame. But that's just where we're at right now. Like it looks like it's bouncing off of the moving average to come back up to retest this like monthly time frame or this monthly key level right here. So let's see. Monthly. And then once we jump down to the weekly, it'll give us some more data. So now we see, I mean, just looking at it, because I wouldn't come too far back here because this isn't as really relevant. You want to like stay, I mean, 2 years back is enough, but like if you want to go back to like 2015, 2016 and get data, you can. But just looking like right in this area here, just to see if I could find anything. See, one chart, like something about right there. I see something about right here because I got like a tap, a little gap, an overlap, a tap, some gapping right here, a little bit of overlap. And if we bring it to a candlestick chart, you'll see like price stopped, turned around, wicked above, turned around. It came up to that line, turned around, and then it held right here at that line and then broke through, was pushing wicks up to that area, but it just kept turning around, broke through it. You see what I'm saying? Like you see how like price was doing like crazy stuff like right at that area?
Yeah.
A lot of it. So like that's an area you want to pay attention to, right? So we'll put that there as like a weekly. And then if you like spread in between these two areas right here, that's like damn near at the 50%. So if I took like a Fibonacci and put it at this top line down at this bottom line.
So what would make you put that fibs from that point?
Well, so it's not, I'm not necessarily using the fib to draw out the candlestick, but I was just showing you that this weekly is damn near like in between these two monthly areas.
Okay, I got you.
Because you see this 50 right here?
Yeah,
That line I drew is like right at it, like right at that 50. So I could, because I didn't get the coordinates, let's see, change that up right there. Might drop it down just a tad bit. Nah, so it's sitting right there. So like right at this 50, they're looking at about 36, I would say like 3,600 or it's right in that zone. But that's perfect. Like wherever that line sits, like whatever looks good with the candles, like if you look at the candles and you start to see like different patterns, like these type of candlestick patterns, like these like dojis and these like wicks that are pointing up and pointing down at that area, that means that that's like an area where the banks are like taking orders. You know what I'm saying? So like prices coming down into it, more orders are being grabbed and then it's pulling back up. Or prices coming up to it, more orders are being grabbed and it's pushing it back down, pushing it back down. So sellers are like here. They have like their sell limits and they're just pushing it down, pushing it down, pushing it down. And that's like week after week. So you're talking about 1, 2, 3, 4 weeks of data, like a whole month of price sitting right at this level. You know what I'm saying? 30 days, like that's significant versus like something like this where it just pushes through it and just keeps going up. There isn't really no stopping going on around this area right here. It's just moving, right?
I got you.
Yeah. So Once I got that marked out, you don't really need to do nothing over here because price ain't over here. And because we're looking at a weekly time frame, like I don't see price just shooting down over here in 1 week. It'll take some time before it gets into this area. But we do know that price is bullish, right? Because from the monthly time frame, price is going up. And even from the weekly time frame, you can see, like, if you took a trend line, no matter how you print it, the trend is going up. It looks like an uphill battle that's taking place, right?
Right.
And depending on how you put it, I mean, it could give you different types of stories. Like if I had the trend line right here, so like point A being down here, point B being right here, it looks like price broke below the trend line and now it's coming back up to test the trend line to shoot down. But if I did something like this right here, so like point A, point B, we got a point C, it tapped here, point D, it kind of rolled that trend line and then broke below it and kind of like broke back above it. So we might see price go a little bit more bullish for, let's say, like another week or two before it actually turns around and sells off. So it just depends on how you look at it. But because we're still like bullish bias, like we'll just keep dropping down time frames and just like looking at it to see like what opportunities there are. So like, all right, so now we're looking at like a daily. So still, I wouldn't come too far back because honestly, like once you start going like more than 2 years back, the data is like, to me, it's like no longer relevant.
Right.
So like right here, let's see. So this is like a major, to me, this would be like a major area to focus on. Let me show you. And the reason why this would be major is because right here, back in the beginning of the year, price came up here and then it dropped down. So like it tried to break resistance at that monthly level, couldn't break it, came up, made above it, and then it came down and then it acted as support. So it acted as support once, acted as support twice, and then tried to act as support, but then it kind of broke below it and came back up and now it shot below it. So then you had this like retest area right here where it basically like retested that support and then it acted as resistance and then it came back down to this like other monthly level. Now it's coming back up to retest this monthly again from what we see on the chart. And this is on a daily. So like right now your bias is like selling on the short term. So on the short term, it's like a sell-off, but you got this like area way up here that it's gonna take a long time before it like ever gets back up here. But like 9 times out of 10, price always comes back to like retest these like major wicks. So it might take some time before that ever happens, but just be mindful that price may come back up here again to this monthly level to retest it, and then it'll fall off again, either down to this like weekly or this other monthly level. But once price gets up here, you know, it'll be strong. Like if it's gonna break out, it's just gonna break. It's gonna look like this, like these big candles. It ain't gonna play around with that level like this. Like if you see these wicks, right, and these red days, like that's like price telling you like, all right, you know, it's weak. It's not really gonna do it. And it looks like it's already starting to do it. Like you got this wick right here, another wick right there. Candles are starting to get smaller. They're not really as big like these candles. So it doesn't look like price really wants to break out. The moving averages is showing like you one picture because it's looking like the blue is ready to cross over the red. And what that means is when the blue crosses over the red, it's the smaller time frame, the 20 moving day moving average. That means that, all right, like price is above both lines. And then if the blue crosses above the red, then price is going bullish. But you look at the RSI, it's about to be oversold or overbought, excuse me. So if this gets up here into this like 70 region and it's up here at this like monthly key level, so you got 2 levels of confluence, right? Where it's like, all right, it's overbought. It's also at this monthly key level. Back here, it sold off when it got there. We had some like resistance, right, or support right here. Like I'm gonna look for like a sell setup, right? And just use those parameters, like I told you, what Raul does, like the whole 1 to 2% risk, and just take the trade. You know what I'm saying? It's a quality setup. Like if you got more than like two to three confluences, like where it's like on a lower time frame, you got like bearish engulfings. You pull the fibs out or however it looks, and then it's like lining up for like a sell opportunity. So like I said, at 38.2 or 61.8, it's like lining up, and then it's like sitting here at this monthly key level, but it's not breaking out to the upside. Like it's go time. It's go time.
So what do you usually set your you said your moving average is set at 50 and 20, right?
Yeah, so like both of them are simples, like just a regular moving average, and one of them is 50 close, and then a 20 close.
And for the RSI, just 14 close.
Yeah, so 14 close, and then these two parameters are 70 and 30. And it should just auto default at 70 and 30, because that's typically the regions that you want to use.
Okay. Because I used to use moving averages and stuff, but I just took all that off and just went straight naked trading and just try to get a more understanding of market structure and things like that.
Yeah. No, and that's perfect. Trust me. That's perfect. But market structure, like, don't get me wrong, like all of this stuff that's on the chart, like Raul says in his videos, is just filters. Like your strategy is like key. You know what I'm saying? So like if you're using a break and retest strategy, depending on what time frame you're using. So like if it's on like the 4 hour, you know, you're waiting for price to break, you know, the previous high or the previous low, and then retest that previous high or low. You know, that's the strategy right there. That's the actual strategy. But when you have the moving averages or the RSI, that's like an extra filter, right? So like the break and retest, for instance, like that might be the strategy, but then you might drop down to like a 1 hour or 30 minute, and then you're looking for like a bullish engulfing or a bearish engulfing to jump in on. So that's a filter, right? Or you pull out the Fibonacci, and if the Fibonacci goes to 38.2 or 50%, you're gonna take that trade. That's also the filter, right? So you just wanna think about like, all right, like what is the actual like strategy that I'm using? Like, am I doing a break and retest? Am I doing a double top, a double bottom? Am I like, you know, just trend continuation, or am I looking for reversals? Like you gotta think of that strategy, and then once you got that strategy, then create the filters like through back testing. So like this is your pair that you mess around with. I don't really mess around with Euro odd, so I don't really know its like tendencies. I just I traded GJ in gold because I know he was teaching that, and it was easy for me to just like learn by actually being on the GJ charts while he was teaching about GJ. Right, so that's where I like found my success from.
So would you ever take a trade like based off of 23.6 retracement, or
you said what happened?
I said, so would you ever take a trade like based off if it was to retrace to 23.6 or anything like that?
23.6, not really, because I've been burnt by 23.6, man, in the past. Like it'll go to 23.6, move sideways, and then go higher. It'll go like 23.8 or 61.8, and then when you get to like levels like that, like just think about it. Like if you take a trade at a 23.6 and then it retraces to like 61.8, that 61.8 might be 30 pips. If your stop loss is 25 or 20 pips, you're stopped out before it even got to its like full retracement. So like I'll like 38.2 is like where I'll like start watching it, and then I'll just see how it plays. Like if it starts to like it's like pushing wicks at like close like to the 50, like if it's pushing wicks up towards 50, but it's staying under the 38.2, and then it's starting to print like bullish or bearish candlestick patterns, like bearish engulfings, bullish engulfings, evening stars, morning stars. If it starts doing stuff like that, then I'll take the trade at the 38.2. With the stop losses like above the 61.8. But like the 23.6s, that's a bit, to me, it's a bit risky. It's not like that golden zone.
I got you.
Yeah, and even if it does turn at that area, like let it run. You know, let it do its thing. Like there's always gonna be like an opportunity that pulls up. But I would prefer you jump in on trades where it retraces down to like the 38.2, anywhere from the 38.2, 50, or the 61.8 before like jumping into a trade.
Yeah, that's how I think it be sometimes. And like I get impatient with like it retrace to 23.6, and I go to my lower time frames and see that and think it's ready to go, and then like you said, it go the other way.
Yeah. Because most of the times it like, I'm telling you, like I don't even like just pulling out my fib right here. I don't even have the 28, the 23.6. I don't even have that. It starts at 38.2, 50, 61.8. Like my goal, like I wanted to go right there. And then I started playing around with the 70% and the 78.6 and this 88.6. I wasn't really seeing too much happening down here, but I know 38.2 and 61.8, like these are the two areas where price tends to turn around. Like it'll come down to that area and then turn back around. And then when you jump in, you know, at this area, like always look to take your set your targets like at that 0%, because the 0% is like the previous high. So instead of you trying to like, you know, like hit a home run to back to the monthly, which is possible because that's a negative 27%, price more than likely will come up to this area here. Go ahead and be conservative. Take your first profits here at this 0%. And then you can either move your stop losses to like break even or move the stop losses to like profit, somewhere in profit, and then ride the wave up to the negative 27%.
Okay.
See what I mean?
Because I usually go ahead and be looking towards like the 27 instead of just like you said, because it can make a double top like at that 0%, right? Gotcha.
Yeah, so like we don't really know what's gonna happen later on in the future. Like right now, looking at this, I can say like, okay, price broke the previous high. Like this right here is the previous high, right? Looking at a 4 hour, this is solid. So this is previous high, right? But and then it broke above it and then closed above it and then came back to retest it. But I'm seeing all these wicks. I don't like these wicks. Like me personally, I couldn't set myself up to take a buy with wicks like this pointing upwards. But price can go up to this. It could come up here to this monthly level. But me personally, I wouldn't take it because it doesn't look sincere to me because of all these wicks. This looks like people got hella like sell orders right here, and then the market is like filling those sell orders for price to come back down. That's the reason why I would say, like, if you were to jump in at right here, like on this move, when it came back down here at this 38.2, like right here, you had this bullish engulfing, right? But you could have jumped down to a lower time frame, like the 1 hour, 30 minute, right in this area. And I'm gonna show you, you're gonna see something where you can actually jump in and take a nice little move. So like, let's see. So once price started turning around, so you could do one of two things. Like you can go from A to B, B being this like wick right here, or you could have took it from like down here because that's like closer to where price is at. So like A, B, and then into the future, right? So you're just right. You're watching this happen. This is transpiring on a 30-minute back down here, but also on a higher time frame like the 50, you got this going on. Right, so you come down here from the lowest point to the highest point, and then it's retracing. So these are 4-hour candlesticks. So you wouldn't see it right here if you were up here. So like this wouldn't happen immediately. This took a few days before it got down here. So once you drew from down here to here, all you're doing now, you're waiting. You're just, because price already broke the previous high. This is the previous high. It already broke it. So you know it's gonna go higher, right? You're trying to take a buy. You could counter trend because there is enough like wiggle room. Like it's like 100 pips, 120 pips. So you could take a sell. Like if this is your pair that you trade consistently, like you could take the buy and take the sells, right? Because you see where the structure broke. You see that it's retracing now. But if you're just trying to take the buys, you would just set that point A to point B and then just mark before. Here, matter of fact, I could do this. Let me do this real quick. Bingo. Right, so like right now we're looking at a 4-hour, right? So we just bar for bar, we're just moving with it, right? So we know that this is structure right here. So we know that's structure. All right. We could try to start the fib right here. So we just go ahead and put that right there. We want to catch it down at a 38.2.
So what will you see like the break, like as far as like on that, because there was a mini, downtrend, right, on the 4-hour?
Yeah, but remember, like me personally, I'm not taking no sells or I'm not taking no buys unless it comes down to this 38.2. You could have attempted that sell right here. Let me see if I can go back one candlestick. Yeah. You could have attempted this sell right here, this opportunity. Like once price came right here to that, like that first green candle that printed at that weekly, and you saw that wick to it, you could have like jumped down to like let's say like a 30-minute or a smaller time frame and would have been like, all right, bet. I see, let's see if I can go to a 15-minute. All right, I see structure right here. So like right now we're right at this area. I see support right here. All right, so let's move bar, bet. All right, we got a little double top going on. You know what I'm saying? So that's a what was I gonna say? That is a strategy, a double top, right? So we got this little double top going on right here. These candles are like printing like up at the top, right? So they were literally at that weekly level. That would kind of alarm me because it looks like it's just gonna break out. Like it looks like it just out. Once you start seeing stuff like this, so right now it closed at the moving average. If it closes below the moving average, then I would take like a sell. So I would go like, all right, bet, boom, it closed below it. I'll jump here, short position, jump in on that. My stops would be like right above this level right here. So we're looking at 22 pips. And if we were doing like a 2-to-1, right, we'll do something like that. Now, if it hits my TP, boom, cool, I got the 2%. If it hits my stop loss, who cares? It's only 1%. The thing is, like you took the trade based off of your strategy. Strategy would have been like that little double top that you got going on right here. So let's see what happens. So like it plays out, boom. Then we get this right here. That's not looking too pretty in my opinion. And then you get all of this, like now it's like riding this 50 and it's not closing below it. Like back here, you could have been like, once it started like riding that 50 and you started seeing all of this happening, like these 3 candles, you could have been like, all right, this ain't the setup. And you could have closed it with a little bit of profit, or you could have just let it hit your stop loss or your TP. So like, we'll just go ahead and ride it. Boom, it hit stop loss. Cool. You take your 1% loss, it is what it is, right? Then we jump back to the 4-hour time frame because now we're watching to see what happens right here at this level. It's printing a wick, but we're just gonna keep watching it. Another wick, So it closed above this level. Right here, this is a higher high. This candle right here on the 4 hour, that's a higher high. And now it's printing these wicks down to that zone. You could have jumped to a lower time frame and took some type of opportunity there. So right here, you could have came back out with the fib, right? So boom, we're gonna drop the fib right there. If it comes to the 38.2, we're gonna be looking for the buy opportunities. If not, we just gonna let it, you know, keep rising until it comes down to the 38.2. Never came, we just let it rise. Right here, we got another top, so we're gonna hold it right there. Boom, now it's starting to drop. All right, bet we got this little wick. It's pulling down. So now that we see that, all right, this is secure. It's coming down to one of these levels. And now price looks like it wants to come down to 38.2 or 50 or 61.8. Now we could drop down to like lower time frames to like gauge what's really shaking, like what's really good. So like we come up here, this wick down here into the future. We don't know what's happening just yet. So we're just kind of playing it out to see what's gonna shake up. I mean, you could take a sell, like right here, I see support. If it breaks, 9 times out of 10, it'll come back to like retest it, right? So we got something like right there in that area. I mean, you could take a little sell opportunity if you wanted to.
Okay, so when you say break right there, like on this support, would you count that large bearish candle as a break?
So yeah, so this right here would be the break candle. This candle right here, because it basically, like you'll have stuff like this that takes place. Like it'll come down and then the green candle will go right back above it. That's not a clear break. But when it breaks like this, even if it's a green candle, it's still below that level of support.
Okay, so long as it closed below that support, it's a break.
Below the support or above the resistance, it's a break. It's a clear break.
Yeah, because I always thought like it'd have to close a bearish candle, like 2 bearish candles to consider as a break.
That's one way to look at it, but you also gotta look at this candle right here. Right? This is a very, very, very weak bullish candle, right? So to me, that holds no weight. This holds no weight. And honestly, we're over here looking at the hour time frame. We haven't even dropped down to like a 15 minute. You know what I'm saying? Like now when you drop down to a 15 minute, you got this right here. Boom. Right? This red candle, this doji, followed by a red candle, right? And then you have this retrace. So this retrace looks like it looks like a 50%. Let me see. Yeah, right at that 50, right? So you could have took like a sell opportunity right here with the zeros being your targets, right? So like right here, set like your stop loss like a few pips above it, like let's say like 15 or whatnot. And as long as like your zero is like a 2 to 1, it's a solid trade. Or like you see how it's like 1.87, it's like 1.5, in between that 1.5 to 2. So you could take that if you want to take that. Me knowing in hindsight, we know that it's going to come further past that, right? But this is just me looking at a smaller time frame to take a setup. Now, if you're risking 14 pips, right? Let's say your account is 10K, right? If your account is 10K and then your 2% is $200 or whatnot, 14 pips divided by, or 200 divided by 14, you can essentially take a trade with the 1.4 lots. Right, so 1.4 lots on a trade like this on a 15-minute time frame, and then let's say you do snag the 26 pips. You know, you just made like damn near like 400 on this one trade, 15-minute time frame, right there, and that's on a retrace. So now imagine doing that, like with all of this right here that's taking place, like all of this break and retest. So like right here we had this higher low, higher high. And then it kind of made like a higher low, didn't really print a higher high, and then it just kind of broke structure. It crumbled right here. So crumble, like boom, you got like one opportunity right there. So it printed a lower low and then a lower high right here. and then a lower low, created a high, but not a higher high, just a regular high, a low, a lower high, a low, a lower high. This is like that little descending triangle pattern right here. So that basically was like signaling like, all right, we're going lower just because of like this right here that was taking place. Right, so you see, when you see that little pattern right there, that's letting you know like, all right, price is gonna keep going lower. And then we know, remember, we know on the 4-hour time frame that we're trying to get price down to this 38.2 level, right? We're still not at 38.2 yet. 38.2 is right here. That's what 38.2 is, right? So we keep following the pattern. We keep moving along with it. So 15-minute time frame, still pushing, it's still pushing. All right, now we're at 38.2. So now we can start like paying attention to what's gonna happen in pricing, right? So we're at 38.2 on a 4-hour time frame, but we're looking at the 15-minute, right? And we're making these lower highs, lower lows. So we're just gonna watch what happens. Oh, whoa. So price is basically moving sideways. But from a pattern standpoint, I see a head and shoulder, right? So like, if you look at this, do you see the head and shoulder?
Yeah, to the left, the middle, and the right side.
Yup. Boom, boom, boom. And then we could see something happen like where it turns around right above here. So we just keep watching it, see what happens. So boom, now we got like a little double bottom right here. So remember, if your strategies are double tops, double bottoms, you could take a setup right here, down here at this area, right here, where your basically stops are below this area, and then your targets are probably at the highs right up here. Right, so boom. Now we're starting to get that break. All right, so what's the previous high? Right here in this area. Let's get this out of here.
I got a question. So as far as like when we see that break down at the lower low.
Down here?
To the middle.
What's that?
The middle one. Like when we see the
right here.
Break of that, left a little bit. Yeah, right there.
Yeah.
Would you count that previous lower high, like that large red candle where we see the break?
Right here.
To the left.
This one?
Yeah. Would you count that as like would you count it as a lower high point, or would it have to break the 38.2 point?
Well, remember the lower highs are based off of structure. So it's based off of this this low. So like this push created this lower low, and then this retracement created this lower high. All of this push created a lower low, and then this retracement created a lower high. This right here did not push low. This was a higher low compared to this one right here. So right here, this is like signaling, all right, it's no longer a low or a lower low, it's a higher low. So price could signal a reversal, or it could mean that it's moving sideways. It's just consolidating right at this area. But I wouldn't look at this candle right here as a lower low. I would wait till it starts to retrace, because this right up here, this is the high on the higher time frame. And the reason why it's the high is because that's where price stopped, and then it started to turn around.
Okay.
Right, so right in this area right here, let me see something. Bingo. So like looking at this right here on the 30-minute time frame, it like broke out above that. And Now it's starting to retrace back down to that line. But you see how there's the moving average, the blue line is above the red. That's letting me know that price is now starting to turn around. So you could take a setup right here at this area if you wanted to, with the stop losses below here, below the previous low area. So like you'll take a long. So let's say we put that like down here, targets at the previous highs, and we'll just look at it like, all right, what's the ratio of 1 to 57? That's all right. That's like a first trade if you want to take that first setup. And we'll see how it plays out. So it's like moving sideways, but that's good that it's moving sideways. That's letting you know like, all right, I'm not in immediate drawdown and it's just like going lower and lower against me and I'm just losing. Right now it's like kind of running in profit, which is perfectly fine. And I mean, if you wanted to, you could take another setup like right around this area. So it broke that high and now it's coming back to retest. You could be aggressive and just jump in right here if you wanted to, or you could wait for like a 15-minute candle, like look on the 15-minute time frame to see if you can find like some type of like bullish like engulfing. So we got this like doji, this like red doji, that's pretty much signaling that there's gonna be a reversal. So the next candle might be like a green one, signaling a morning star. Boom. Take that setup right there. Boom, you take that. Risk is below this low right here. We got about 17 pips. And then we're taking the parameters up to the highs. So even if, let me see, right up here. So that's like a 290, that's a 2.95. So it's like a three times your risk for that reward right there on that setup. Now, this is a bit tight because you're basing it off of this low. Like if you were to be realistic, you would want to base it off of like this low down here. But if you were trying to catch like, you know, more of the move, then you'll take it down here. You can put it below the moving averages because 9 times out of 10 price is going to come to the moving averages, hold at the moving averages, and then turn around.
I got you.
Pull out a fib maybe if you wanted to, just to see like where price is like currently at. I bet we're right at that 61.8 area, right? So like, you know, it's confluence. Like you're at a 61.8, right? You got this large wick pointing to the downside. That's two things. Let me move this out the way. You got a break structure with a retest, right? So break structure retest 61.8, and then you got this bullish candlestick pattern. That's 3 confluences. To me, that's a solid trade. Even if it hits stop loss and it knocks you out, it's still a solid trade. I would still take it.
Gotcha. I think another thing why I was going wrong at is like we see what that retrace at on the pullback, like from a high
right
point.
Here? Or right here?
Yeah, the other one.
This one?
Yeah, that whole counter trend right there. I usually count like I see what we from the previous low, like how we draw our fibs. Like if it break that previous low point, it'll be a break instruction. But I usually like I see it's an overall uptrend on a smaller time frames, but like you see like I think it's your 20, I want to say your 20 MA.
Yeah, the blue one.
Yeah, where it broke that, where we got them 2 red candles.
Yeah.
I don't know why, but I usually count that like as a minor structure. So I'll be waiting for it to break back, like where we see that green candle break.
Break above it, like right here.
Yeah.
So, and that it's not wrong. It's not wrong for you to think like that. That's more of a conservative approach because you're using all parameters to gauge the direction of the movement. But like if you're moving, like if you're looking at it, you got to think about it like this. Like indicators, they move late, right? It's based off of price that already happened and it's printing it now. So like you seeing this right here, like this little area right here, price coming down here, this is you seeing it real time. The moving averages haven't adjusted for that yet. This right here is shown right here on the moving averages.
Gotcha.
That move right there is right here on the moving average. So you waiting for it to break here, you're actually looking at, like, what is this? Like 1, 2, 3, 4, 5, 6, 7 times 15. What is that? Like, you're looking at like 90 minutes that past. You're basing your move 90 minutes in the past for what's happening right now, versus just looking at price right here in this area and just taking the setup based off of like what you're seeing with the candlesticks, because the candlesticks are telling you what it is. You know what I'm saying? Like right here, it's, if I took these moving averages off and it wasn't there, like, just look at this. Like, break was right here, break of structure, boom, retest, boom. When the fib came out, it was at a 61.8, perfect. You got this bearish engulfing right here, perfect. You could have even took like your like a trend line if you wanted to, put that right there, boom. It broke above it on that trend line. I mean, it on the trend line, that bearish engulfing broke above it. So you could look at that as a bearish engulfing or a morning star. Because you got 1, 2, 3 candles, or you could just use the doji in this candle, boom, right? Broke above it. You take the setup right there. You're in a little bit of drawdown, and then immediately it just puts you into profit. And like I was mentioning, that's 2 setups that you just took. One was for 1.5% or 1.5 you risk. So like you risked 1%, you just made 1.5%. Right here, you risked 1%, but you damn near made 3%. So in total, you made about like 4.5% on just one move, right? One move that just took place. And this move, like if we jump back to the 4 hour, we haven't even gone to like where price is right now. Like that's just part of the move.
Right.
You see what I'm saying? Like
back to that 0% where you said you'll set your take profit.
Exactly.
Gotcha.
Exactly. You set it at the 0%, you have no worries. If you go trying to set it way up here at this like negative 20, now you gotta worry about price breaking the previous high, and then any other form of resistance that's like stopping price from coming up to this monthly level. You got to worry about all of that shit, right? It's just too much to worry about versus just going back to the previous high. Just go back to the previous high, get out the trade. It to me, it's not worth it. It's not worth it when you can make the same 4% going back to 0% than you would trying to go all the way up here to this monthly level.
Right. I got you. So, and as far as your fibs, like, did it always be from your lowest point? I know, like, and I think I used to draw fibs like that, but I had started drawing it from like what we see the break. I dropped from like the previous higher low point.
What you mean?
Like,
like down here?
No, like, okay, like what we see the break, what was the break? Around like the 16,400 area?
16,400.
Up at the
6,400?
Yeah, like
right
around
here?
the, yeah, I usually draw my fibs from like that previous higher low, and I don't know why I did that, but I don't know.
So no, I get what you're saying. So you're saying you draw fibs from right here to here?
No, so all right, boom. All right, we see like, all right, for instance, we see our previous higher high, right?
Right here? Yep.
So we see what we look to the right, where it broke that resistance. And I don't know if that candle closed all the way yet, but I usually draw like right at the 16,400. I draw my 0.8 fibs to that higher high where it broke.
So let me see. So like would it be like from right here to here?
Yeah.
So that's fine, but now you're trying to gauge the next move that's going higher. You see what I'm saying? Like this wouldn't. We're not here yet to draw the fibs because we don't Like if I put that right there and then I like move the candle to the next bar, like yeah, that might be it. It might retrace back down. So like boom, it like came down on a 4-hour time frame. That's right, because you're essentially you're looking at a move that's taking place, but you gotta be mindful that this isn't technically the low. This is the low right here.
Gotcha.
This is the low, because this is where the price went. It came from this low to this high, came down here before it printed. It came back up to this high.
Gotcha.
When it closes at the high, this is the previous low. Now, if it never came here and it like stopped right here, let's say like down here, and then it came down here, then this would be the low, higher high, higher low, lower high, and then the lower low.
Gotcha. Okay.
Yeah, but drawing the fibs right here, this wouldn't be a low. This wouldn't necessarily be a low, because price didn't make a new high, you know what I'm saying, or it didn't make a new low. So you can't classify this as anything realistically besides looking at it on a smaller time frame and just like taking a setup right at that area, because that's what you were just looking at. This was it right here. That's all it was.
Okay. And
So
it's like it mainly be trading off those lower time frames instead of going based off a higher time frame, you would say?
What's that?
I said that'd be more based off that lower time frame instead of looking more towards the higher time frame in that situation.
Exactly. So like if you're not comfortable yet, you know, utilizing all time frames, you can trade off of these higher time frames. You just gotta be mindful that, you know, because you're looking at a higher time frame, you're gonna be swinging your trades a little bit longer. Like you're gonna hold them a little bit longer. So like for instance, like if you were to take this bullish engulfing right here, this is a solid entry, right? You could take that right at the top here where it closed, and then risk below this area if you wanted to, or like do something like down here with your take profit right up here. So let's say like we're using this little area, this little structured area. So we can use that as like your previous lows, and then put price down here, and then, you know, come back up to the top. That's a setup right there. That's like a 1 to 5. So like you're risking 1% to make 1.5% right there on that setup. I mean, if you pushed a little bit higher, you may be able to get that 2%. I mean, yeah, that 2 to 1 that you were looking for. But looking at hindsight, let's see. If I came here, right? Let me see. So right there, we took that setup. If I put my TP right there, Raul, what he does is he uses, and I'm trying to get familiar with this, like fib extensions.
Mm-hmm.
So let me see where it's at. What is the tool that he uses? I haven't really used it before. I think this is it. Boom. Nah, that's not it.
I think he do point A to point B to what retrace that. I think that's, if I'm not wrong.
No, you might be right. I'm trying to use it because it's quality. I never used it before. I'm trying to see.
That'll be the same, like how we doing this. That'll be the same as that. Like our fibs already though, right? Like as far as the negative 27.0 and the negative 61.8. It's kind of okay.
Yeah, so essentially that's what I was looking at it on a 4-hour, thinking that it would stop right up here in this area, but I mean it was like way up here, which is like I wouldn't play around with this. I wouldn't put my TP way up here because I mean you got too much for price to like move against, you know what I'm saying? But like if you had your TP at like a 2 to 1, like right here in this area, this is okay to a certain extent because I mean you got these highs right here. Like price could come back up here to retest these highs, which is like reasonable. But me personally, I like looking at literally the previous highs. You know what I'm saying? Like one thing I know for certain is if price is gonna, you know, if it's gonna go higher or if it's gonna go lower, 9 times out of 10, it's gonna double top, right, before it goes low. So I might get stopped out with my wick, or not stopped out, but my TP might get hit because of a wick candle that just like taps somewhere in this area right here, right before it turns around and goes low. But even with that said, I mean, it would have, you know what I'm saying, it would have hit. But right now, this is where we at. You know what I'm saying? Like, we're right here. So after all of that was drawn out and we saw everything that took place, so right at this area, like I said, nothing is closing above this previous high, which is at this 0. You know, I would be wary of like taking buys right at this area. Like, I would just wait it out to see what's gonna happen, because it looks like price can either, this being the support right here on the 1 hour time frame, if price comes down here, one or two things is gonna happen. It's either price is gonna come here and then shoot up, kind of tap here, and then come up to this like monthly zone right up here at that monthly area, or price is gonna do something like this where it'll like break below here, retest, and then come down to this weekly area down here, right? So either way it goes, like, you gotta set up both ways, right? So I would just pay attention to like this little area right here, this 64,600 area, to see what takes place right at that zone.
Okay. So how would you draw, like, what points would you draw your fibs like on the 1 hour chart right there?
The 1 hour chart?
Uh-huh.
So on a 1 hour chart, let's see. This being the last high, so like this was the low, higher low, higher high, higher low, higher high, higher low, and then the higher high right here. So I would come down here from like tripping. So I'll come down here to the highs right up there, and I would just watch it. So right now 61.8 was the area that price was like holding. So like you see big red candle, green candle, push it back up, red candle, green candle, push it back up, red candle, big green candle, push it back up, red candle, green candle, wicks down to 61.8 wicks, a lot of wicks, big red candle, green candle, pushed it back up. Like, you see all of that taking place. So it looks like price is like holding that 61.8 area right here in this region, being the 64,750, like, which is like a quarter point right in that area. And then you may be able to see like an opportunity for it to just push higher from this point. But you would just want to watch it, you know what I'm saying? Just like watch it carefully at this region to see like what happens.
So you wouldn't want to like, you wouldn't say would you say that's a sale bias, like after it break that 100%, or like once it break that that point where we got the highlighted area at?
Right here?
Or would it have to break that 100% first before you even confirm it as a trend switch on the 1 hour?
Well, so on a 1 hour, if it breaks this little red area, then it's a short-term sell. I would look at it as a short-term sell. Okay. If it breaks this area right here on the 4 hour, then it's a structure break. So if it goes way down here, then it sells. We're not even looking for buys. But right now, like boom, 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 we're still in buy territory. But I just wouldn't take any trades right here because of these wicks. These wicks to me is telling me that the buyers are exhausted and the sellers are starting to take their orders to push price down.
Okay, gotcha.
Because as you can see, like if you look right here, you don't really see wicks to the top. Like price is pushing up, but you don't see wicks like at the top of these green candles. There's not a lot of wicks. Like up until you got here where these wicks were, then you got price turning around. And then once again, green candle, not really too many wicks. And then you start getting these wicks, big wick, big wick, very big wicks. Now price, it looks like it's curling over, and then it's not really, you don't got these like big green candles like in this area, so it looks like price is like just slowing down and it's ready to turn around.
Gotcha.
So next week, next week will tell you like what's really good. So like on the 1 hour, you know what I'm saying, like on the 1 hour, you'll see like either price is gonna come back down here and then come back up, and then that'll let you know like, all right, price is consolidating, because it kind of look like it's like in a channel. If you kind of look at it, it's like bouncing between this little area right here. Or price will just break out above that, retest this area, and then shoot up to that monthly zone. But right in this area, there's about like 53 pips. So, I mean, there's room to take a trade, like even within this little area. But you would just want to, like, if you're going to take a setup in that area, like you're going to want to come down to like lower time frames so that you can actually, you know, take a quality trade. But I don't even really see anything. Like, this is too big of a bullish engulfing, too big, no setup right here. I mean, that's a little something right there. No setup. I mean, there's not even any buy setups like on the lower time frame in this consolidation area. So I wouldn't even take a trade. Okay. I wouldn't take no trades in this area until it breaks below this area, taps, and then goes down, or breaks above this area, taps, and goes up.
Okay. So if he wasn't to see like those wicks wasn't really like printing on the high time frame, and we see the engulfing right there on the lower time frame, you would then take that though, right?
Wait, what's that? Which one?
Like how we see like basing off the 4 hour, like how we see our wicks and stuff.
Yeah, right here.
Well, no, because you said that'll still, at the end of the day, that'll still be 23.6 though, probably, wouldn't it?
What's that, for like a retrace?
Yeah.
Yeah, that's, let me see. So from right down here to up here. No, so it came down to the 38.2.
Okay.
Like if these wicks weren't here and it was just like it pulled back and then kind of like the candles got small and then they started printing like bullish engulfings and like big green candles. Oh yeah, you know, like that's a quality. I mean, it's quality, like a quality setup. Like the candles are letting you know that price are going higher. But right now, even though it's like it's like right at this 38.2 on the 4 hour, which is like a retracement zone to like take a buy opportunity. I just personally, I can't say that price is gonna go higher right at this second. What I would have to do is literally just wait till next week when the market opens back up and see if price is gonna pop out above this little zone, pop out and then tap it and then go up, or if it's gonna drop below it, tap it and then go down.
Gotcha. Okay.
Yeah, bro.
Ain't no candles, like I paid attention to candles, but I ain't know like they were that important, like as far as like, cause I actually would have took a buy like in that area, but just with, like you said, the wicks and stuff, it ain't really much buyers in the market.
Bro, pay attention to wicks. Wicks. They'll tell you what you need to know. Like I took like Friday, I think I did like damn near like 3,700, bro, on Friday alone. And I was just taking like these little trades. So like I caught, let me see, what's it? The first, so that means July 31st was like here, yeah. So like I took 2 trades. I remember I was like talking to my girl. We were in the living room, and I was like, yeah, I'm floating like, I think it was like $1,500, but my TP was set at like right here at like 1960. I think it was like 1964. Let me see. I remember I jumped in at like 1954. 1967, was it 1960? Yeah, it was definitely 1967. So it was like something right around there that I like jumped in on or whatnot. And I like snagged that trade right off of like a lower time frame. I think I was looking at like the 15-minute. So I saw like this right here. So price like pretty much printed like it broke structure right here on a lower time frame. So like that structure was broken, and then it came back up to retest it, and I was like, all right, you know, it's looking like a sell opportunity. But then once it got down here and this green candle printed, that's when I was like, all right, it's a go. Like, you know, gold is about to go bullish again. And then it already like tapped. Like I caught this trade, like people caught this first. I missed this one, but then I caught this second running up to 1975, and I was like, all right, bet. Then when this happened right here, it was like, it wasn't a lower low, it was just a low, right? To like this right here, but it was a higher low on a higher time frame. So I'm like, all right, bet, price is going back up again. So then it like did all of this extraness right here. And then once it got like right above the moving averages, I don't know, I just took the buy. I didn't even really like gauge anything. I just took the buy because I was like, yo, I don't think price is gonna go below these moving averages. So then it just literally like minute after minute, it was a slow grind going up. Like I was like looking at my chart and I'm like, damn, all right, you know, 1300, 1500, 1700. And I just closed the phone. I was like watching TV, came back to it, and then, you know, it hit the TP. So it just closed it out like $2,000. And then I was on a treadmill the next day or that morning. And I think it was right here, like right in this area. Like this one was like more of like a play trade. I don't know why I was doing this, but like I just like took a play setup. Like once it broke this moving at the 20 moving average, I was like, all right, it's gonna drop back down to, I think it was where I closed at. I closed at 1965. That's what it was. Like right down here. Like right down there. That's what it was. And I was like, my wrist was like right above here. And I was like, all right, bet, I'm gonna snag that. And literally snagged that. And then in the midst of doing all of that, I like snagged a couple GJ like counter trend trades on like the GBP chart as well. Like, where was it at? I was like down here. So like I saw this and I was thinking it was gonna come back down to like, I think it was like 30, 36. Let me see where we were at. I remember it was like where it broke. I think it was like right up here. And I was thinking I was going to come down to 36.75. Yeah, that's right here. I thought it was going to come to 36.75, but it never did. It like started to move in my favor. And then I put my stop loss in profit. And I just like had my TP set so that even if it hit me out with my stop loss, I still made profit. But if it hit my TP, I made profit as well. So like, it never, like, it was like damn near like 3 pips away from my like TP, and then it just turned around and like stopped me out in profit or whatnot. But like I was like taking a couple setups, but like these setups were just like, you know, like wick based. So I was like looking at wicks, looking at the candlesticks, like seeing what was happening. So like I was seeing like these bullish candlesticks, and then they were coming above the moving averages. So I was like, all right, cool. Like price is looking like it's gonna, you know, go back up or whatnot. And then over here was more of like a double top. So I saw like price came down, came up, it came right back up to this like high. It didn't like close above it. So I was like, all right, cool. And then I started to see these like red candles that were printing with like these like little wicks above here. And I was like, all right, bet. If it closes below the moving average, I'm gonna take the setup. And then I saw this candle right here. So I like went ahead and took the setup, and I just like rode it down to like this little area right here. I don't know why I chose 1965 honestly for this trade. I think it was just I was on the treadmill, bro, and I was like, all right, I'm gonna just do like something close, you know, like 1965. Like it ain't too far away. Like I probably could have went like 1960 if I wanted to, but I was like 65 sounds like a good round number to set TP.
It's profit, man.
Yeah, but like trades like this is to me, this wasn't a quality trade. Like although it like went in profit, it wasn't like a fully thought out trade. I definitely rushed this second one. I was just like feeling myself.
Facts. Jeez. Yeah, man. I think that's really about everything for real, as far as like anything I can think of.
Yeah. Nah, this was solid, bro. Like, this was definitely a solid little session. I needed this one.
I appreciate that, man, for real, man. Cause I don't know, man. I don't know, man. Like I'm to the point, like I've been in it. Well, I ain't even gonna say I've been in it long enough, but I've been in some years where like I can't turn around. You know what I'm saying? Like I gotta keep going so I can get consistent. And I don't know, man. Like I don't know. I got that motor, man, for real, man. Like I just can't put it down, man, for real.
Bro, do not. If there's anything I'll tell you, bro, like don't stop. Trust me, you will get it. Like if it's not all the way there for you, like it will click. Just stay on the charts. Stay on the charts, bro. Because that whole statistic of 90% of traders fail, they only fail because they stop. That's the only reason why they fail. There's not a trader today that's been trading for a decade that is just still like losing money every trade. You know what I'm saying? Like people that trade for long periods of time, it's like anything. Like if you play basketball long enough or you play football long enough, you're gonna get good. The only difference is, like, in order to make it professionally on those levels, you gotta be like physically in a certain caliber to get to that point. You know what I'm saying? Like a young dude that's like 160 is 9 times out of 10 isn't gonna make it to the NFL as like a star wide receiver or a star lineman. You know what I'm saying? You gotta be a certain weight, a certain size, a certain speed, certain height to get to that point. But trading, anybody could do it, bro. Like you got women, young chicks that can come out and make 30,000 in a few hours. You know what I'm saying? Or you got old heads that, you know, done it their whole lives or up 100 million. You know what I'm saying? Just trading because they just literally love to trade.
Right. Yeah, man. And I got one more question. Like as far as like I know you said like the percentages and stuff like that. So how do you mainly base the percentages off the just the levels or
off of the risk? Off of risk. So based off of where you're about to jump in, like for instance, let's just look at GJ real quick. So like so let's say we're looking right here, right? We got a structure break. So like right here, this is the previous high, or this is previous high, right? Because it's pretty much both a high. Once price broke above that, being right here, and then price came down here to this area. So this is, if we pull the fib out, right, from the previous low to the high, we're sitting right here in between the 38.2 and the 50, right? So if we took the setup right around this area right here, if we did it on a 1 hour time frame, this would be our risk to reward. So we would take it right here after this like bullish engulfing. Essentially, your previous low is where you want to have your stop loss set below, because price can retrace all the way 100% and still go up and create a new high, and it'll still be valid as a higher low or a low and then a higher high. It'll still be valid. So anything below 100% is clear break, and it's no longer valid for like a higher high, higher low, right? So if you had your stop loss set down here, right? So let's say 51 pips. Remember, you want to have at least a 2-to-1 or like a 1.5. So 1.5 being like right here, that would have took, what's that, the 29th to the 30th. So it took about a day to get there. Still took a day to get there, right? So where was it at? So even if we're doing like 52 pips, right? 52 pips to make 106 pips, right? So like that's our risk to reward. If none of this was like here, if we were like right here And we had that. So like we jump in right here. Our lows are set, or our stop loss is set like right below these wicks, right? We got the 2-to-1 set up. So we're risking 1% and make 2%. And then that's it. So based off of how many pips that is, let's say your account size is, let's just say it's like 5K, right? So 2% of 5K is $100. So divide $100 by 48. That gives you 2.08. So the biggest lot size you can take on this trade right here is something where a 0.2. A 0.2 is the biggest lot size that you could take. So if you just do one trade at a 0.2, or you do two trades at 0.1, where you have like a twin trade, so like one you close at 1.5, and then the other one you just let run or whatnot, you could do both of those. But so just let's just say you do a 0.2 on this setup right here. So you're gonna lose $100 at a 0.2, but at 106 pips, you're gonna make $212. Okay. And then the next set, so then you can do that. If you do that 5 times, now you're at 6,000 in your capital. If you're risking the same 2%, now you can risk $120. So $120 divided by the 48, you're now at a 2.5. So you can do a 0.25 on the lot size. So if you made 106 pips, now you're up $265 on that same type of setup. You see what I'm saying? So you literally take the pips that you're risking, and then you divide that by the amount of the risk for your account size. So your account size is 10K, 2% of that, $200. $200 divided by 48 pips equals, it'll give you a number, whatever that number is. Like, let's say that number is like 4.1. So that means that your biggest lot size can only equal $4.10 per pip.
Okay. And you will mainly draw that off your higher time frames, or you want to draw that on your lower time frames?
No, so I would definitely draw it off my lower time frames. I was just using this as an example. Okay. I would definitely come down to like 15-minute, you know what I'm saying, and then look for a setup on the 15 minutes. So for me, it's kind of, I know that this was the swing low, the swing high. We come here, we take this, put that about right there. Draw that there. So we got a few taps, right, that are going on. So what we're looking for, we're waiting for price to kind of break this area here. More specifically, this previous high right here. We want price to break that. Boom, we got that break. So we could take the trade right here. So we took the trade right here. Boom. Stops are right below here. So we got 29 pips on the stops, right? So let's say we got 30 pips on our stop right there. But if we look at the higher time frame, the 4 hour, right? Just looking at the 4 hour, or excuse me, the 1 hour, that's what we were just looking at. We know that from the swing low being right here to swing high being right here, negative 27 is typically your first like target that you can snag. And because remember the last time I was saying like always go to your previous high, that's on the 4 hour time frame, because the 4 hour time frame, you know, that's the strongest structure. If we're looking at the 4 hour time frame, my targets would be way up here. And I would just draw that out just like that. So like that would be my targets on the 4 hour time frame. But then we come back down here to look at our assess our trade. So this is, you can either use this low right here, so like the ultimate low, or you could use this low like right down here. So either or works, whichever one you want to use, right? And then now you know that, all right, 30 pips is like my stop. 30 pips is my stop. And then right up here is where I'm taking, like I'm closing out my trade. So like 57 pips is where I'm taking it. So same setup. $100 is what you're risking divided by that 30. Biggest lot size you could take is a 0.33. So let's say you take that 0.33 times 58. So you would have made like 193 on this setup right here. On that
so
trade.
You wouldn't have took that trade if you could zoom in some. You wouldn't have took that trade off the that first bullish engulfing, like to the, let's see, where it's under the 20 MA.
Right here.
To the left.
Right here.
To the left. A little bit more.
This one.
Yeah. Could have took
that would have been solid. Like you could have took that right there if you wanted to. But remember, like when I drew this trend line on the 15-minute time frame, I'm now looking for price to break out above it.
Okay.
You know what I'm saying? So it all depends on like how aggressive or how conservative you're trading that certain pair. Like I know GJ moves. You know what I'm saying? It moves a lot. But there's a couple key factors you want to pay attention to. Like one being there's a monthly key level right here. Like where this red line is, or this red shadow area, this is a monthly key level, right? So like you got this monthly little key level right here. So if I were to take this bullish engulfing, you know, I'm gonna be immediately stopped by a monthly key level, right? So, but if I wait for it to break out above this trend line, right? It'll break out above it, move a little bit higher, and then come back to retest it. And then if I could take the trade here, I would be more confident taking the trade here after it broke this trend line, knowing that it's probably going to go higher versus me taking it below the trend line and then knowing there's a key level here, plus the trend line is also blocking me. So you got like two factors that are going against you right in this little area.
Okay. Gotcha. Sheesh, man. I done learned the whole course, man.
What's that?
They feel like I done learned the whole course.
Hey, man. Something like that.
I appreciate that, man. For real.
Hey, you know it, bro. You know it. Like I said, this joint is this is recording. So like once it's like done recording, I'm gonna check on my girl to see if she's okay. But once it's done recording, I'll go ahead and just text me your email. Okay. Matter of fact, what is your number, Jalen?
252.
Give me a second. True 52
294 5843
5843.
Yeah, man, lock me in, man.
Yeah, I got you, bro.
Okay.
I got you.
Where you from, man?
I'm from New York, man, originally, but I live down here in Atlanta.
Okay.
Yeah, what about you?
I'm in North Carolina.
Gotcha.
Yeah.
That's what's up, man. So you a Cole fan or you mess with Baby Moore?
You said what now?
Are you a J. Cole fan or you mess with Baby Moore?
Lil Baby or Da Baby?
Da Baby.
No, Cole. I gotta go Cole, man.
All right. I'll give you that. Nah, I mess with him too, man.
Yeah, Cole be spitting.
Seriously, bro. Seriously. But all right, man. So I'm a once it like saves, it's gonna save to my computer. Once it saves, I'm gonna shoot that over to you. I just texted you my contact, so you can text me your email, and then I'll get that over to you. And shit,
okay.
Let's stay on these charts, bro. Like whenever, dog. I got a couple homies that want to learn this stuff too, man. So, you know, we could definitely just kind of put together a little group where we just kind of like looking at chart setups and just like giving our own analysis and breakdowns on what we're looking at.
Okay, that's cool.
Yes, sir.
All right, man. I got you locked in. I'm gonna shoot you that.
All right, Jalen.
I appreciate it.
You know it, man. Be safe, dog.
You too now.
All right. Bye.